They messed up and they want you to fix it. They want to break you financially. So we're going to discuss what happened, how it happened, and what you can do to make sure that it doesn't happen to you and they're unable to break you financially. Welcome to the channel. I always talk about things in terms of getting out of debt and getting you financially free, because real freedom is financial freedom. Okay, so what am I talking about? I'm talking about the fact that the government caused crazy inflation. What did they do? Well, remember during the pandemic and since then, we had a supply chain crisis, which has lasted a while, and from my personal knowledge, is continuing in many different ways. So that means that we have less goods available because less things were available. And then the government decided to put more money into the system, things like stimulus checks and other things. So we've got more money chasing less goods. Everyone knows that that causes inflation, right? More people want fewer things. Okay, so that's inflation. That starts to go up. Then we've got there's three things that are called, that together are considered stagflation, is the growth of the nation as a whole. Okay, that's you measure it with a GDP, the gross domestic product. What does that mean? Essentially, how much goods, products, services, things is the United States creating. And the more we create together, the better it is for everyone. Well, that number's been going down. And in order to fix this, we've got the Federal Reserve saying, okay, to fix this inflation, we want to get it under control. We want to get it lower. It's around 3.5. It was up around 8. And for some items, we all know it's higher than that. Things have doubled, tripled, you name it. But in order to do that, they decide to raise those federal rates. What does that result in? Well, you've seen it. It results in higher car loan rates, higher personal loan rates, higher credit card rates, higher mortgages. All those things have gone up. Now, when those things go up, it hits the third thing. The third thing is unemployment. Now, unemployment's going up. So we have those three major things all going in the wrong direction. We don't want that, but it's being done on purpose. So what happened was that they caused inflation, they being the government. How are they trying to deal with it? By breaking you, the individual consumer. If they can cause rates to go up, they can cause more financial pain for you. They can cause financial pain for businesses. When businesses are unable to get the funds and the things they may need, they've either got to stop hiring or they have to start firing. And if the individual consumer is also hurt, the demand for the products is going to go down, or services. So again, they're going to have to start firing. So that's the solution the government has. They don't tell you that. They just say, well, we're going to raise rates. And by raising rates, that should help inflation come down. Okay, but what's happening in between there? Why is the raising of rates causing inflation to come down? Because you're destroying individuals' lives. You're forcing them to go bankrupt, to lose a home, to lose a car, whatever it may be. So what that means is that they caused a problem, and to fix it, they want it to hurt you financially to fix their problems. That's not what we want. So take a look at this, because what's happening now is that people are starting to fall into this trap. And I'll tell you what the trap is, but look at these statistics. On this credit card chart, total credit card debt is now over $1 trillion for U.S. consumers. It's gone up substantially over even the last 10 years, from a couple $100 billion to $1 trillion. It's like 5x. More importantly, look at this next one, which some of you may be familiar with, buy now, pay later, and some of you may not. But this new service, buy now, pay later. What exactly is this? Well, it used to be this thing called layaway. You go to a store and you say, I would like to buy that TV. Don't have enough money for it now. They say, great. We're going to put the TV with your name on it in the back room. Give us $100 every month for 4 months. You can have it come back and get the TV. Now they say, hey, take everything you want, whether it's the groceries or something you're checking out online, and it'll say, click here, and you can get payments for 6 months, 12 months, maybe 0%, maybe 5, maybe 10, maybe 20, maybe worse. And so you take the thing right now and just pay us over time. Buy now, pay later, really fast, really easy. You can get that credit, just like a credit card, but even faster. Here are some of the stats. It says that in total, It's a $530 billion industry. Now remember, this is something that just popped up in, let's say, about the last 5 years. They've got stats back in 2020, 4 years ago. They said the total market was $87 billion. Then by 21, it went to $125 billion. Then by 22, it went to $180 billion. And they think by 2030, it'll be over $3 trillion. And they're stating that 1 in 5 of the people in the U.S. are using these types of services. All right, why do they want you to do this? Why does the government not care about these things and letting this happen? Well, first of all, we can't get mad at credit cards and banks and buy now, pay later industry. They're serving a need, right? People need this. People want this. They're there. Perfectly fine. Free market. Let it happen. But you need to be careful because the government knows that this is a win-win for them. Okay? 2 things. 1, the economy is consumer driven. The majority of our economic numbers come from the fact that consumers spend money. So if you're racking up credit card debt and racking up buy now, pay later debt and whatever it may be, government doesn't care. Great. Keep doing it. Keep spending. It makes the economy look good and makes them look like they're doing a great job. What's the second thing? Well, it's a win-win because if you end up going bankrupt, you're going to lose your house, you're going to lose your car, you're going to lose these things, and that's going to help those numbers come down like inflation because now we got more things on the market because they're trying to break you. So the point of this is to point out to you that you don't want to fall into this category. They, the government, need to solve this problem themselves, not by breaking your back and destroying you. Don't let them do it. You don't have to let this happen. Okay, so I've got 3 videos down below that I've linked to that I think are very important for you to take a look at. One is just, if you're not sure, you don't like to budget or that sort of thing, you do need to get started. But the first thing you need to know is, do you have more money going out the door every month than you have coming in? That's not a budget. That's just what you're spending versus what you're bringing in. Your budget is what you want to stick to. Okay, so I've got a video which really quickly shows you how to determine if you've got that, 3,000 going out, 2,000 coming in problem. Now you got a negative. Because if that's happening, how are you filling the void? Probably with credit cards, probably with buy now, pay later. You wouldn't need to do that if you spent within your means. Check out that video because it shows you how to quickly determine if you've got an imbalance. Then I've got another show which shows you how to create an emergency fund. Okay, obviously you're saying, I know how to create an emergency fund. But when you think about it, they say, all right, let's try to have 3 months worth of your spending. Let's try to have 6 months worth of your spending, whatever that is. So you take whatever you're spending, you multiply it by a couple months, boom, you have your number. You look at it and you say, that's a big number. I'm not going to be able to save that. Most Americans at the moment, because of the economy, don't have 3 or 6 months of emergency fund. So this video helps you figure out what should you have ultimately, but more importantly, how can you get the amount of money you have saved to last longer? Let's try to get that 1 month emergency fund to actually stretch to 3 months, but you're not missing car payments, but you're not missing debt payments, but you're not missing housing payments or rent or whatever it may be. So take a look at that because you need to get ahead of it before something like unemployment unfortunately happens to you. You want to last so that they don't break you. Lastly, I've got just this 6-video course which walks you through from how to create a budget all the way through to identifying your debts and tackling them in a way to get rid of them as fast as possible. So I make this show every 3 days a week, and I also have various shows that come out helping you get out of debt, helping you grow your net worth. But at the moment, most Americans are in this pinch where they're falling victim to things like these, racking up 24% credit card interest rates, racking up these buy now, pay later, whatever those rates are, trying to fill that gap and spending too much. I hope this encourages you to not fall victim to what the government is trying to do to you. They're trying to get you to solve their problem. Don't let them do that. We want them, the government, to stop spending so much money. They're spending more than they bring in, and they think they're going to solve that problem and solve some of these economic woes by crushing you. Don't let them do that. So if this video has been helpful and helps you motivate you to start getting your budget in order, start creating that emergency fund, and stop using these high interest rate things for your daily purchases and goods, then please hit that like button and subscribe so you don't miss future ones. Share it with other people, and let's try to get everyone out of debt and everyone out of this crazy rat race that they're trying to keep you in. I hope this has been helpful. Thanks for watching.